Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So in this video, the last video on theory regarding the tax rates, I'm going to finish off. Next video onwards, we'll start the problems on tax rates. So in this video, I'm going to explain you about what are the different types of tax rates, what are the exceptions to the general rule, and what are flat rate of tax and slab rates of tax. What is casual income and what are special incomes? These are the topics I'm going to explain you in detail regarding the tax rates. All the coming problems are based on this theory. So watch the video till the end to get the complete command. First of all, take a screenshot of the notes which I have written on the board so that you can have a permanent copy of this. You can revise it again and can have confidence in writing in examination. Take a screenshot, then I'll explain. So now I'm starting with the types of tax rates. Broadly, we have two types of tax rates. One is flat rate, another is slab rates. So first of all, I'll discuss about the flat rate. Flat rate means a single rate of tax which is applied on all the income. So under this method, the entire income is taxed with a single rate. The following incomes are taxed at flat rates. The Income Tax Act has given the provisions, the explanation that these items should be taxed at a flat rate. So which are the items you must know? Which are the items of incomes which are taxed at the flat rate? First one is casual incomes are taxed at a flat rate of 30%. Always in the last problems also we have done so many times. The casual incomes are taxed at a flat rate of 30%. It will not be included with any other income. Separately, it will be taxed at a flat rate of 30%. Then STCG, short-term capital gain. The short-term capital gain on transfer of equity shares and equity-oriented units of mutual funds are taxed at a flat rate of 15%. Again, I repeat, short-term capital gain arising on transfer of equity shares or equity-oriented units of mutual fund, then these will be taxed at a flat rate of 15%. Then long-term capital gain on other assets are taxed at a flat rate of 20%. LTCG, long-term capital gain, will be taxed at a flat rate of 20%. And transaction of undisclosed income. If an assessee is found having an undisclosed income or undisclosed investment or undisclosed assets, then on those undisclosed income, the tax rate is 60%. 60% is the tax rate. So these are few examples where the tax rate is flat. The entire income is taxed at a single rate. Casual 30%, STCG on shares 15%, other LTCG 20%, and undisclosed income at 60%. In all the above cases, assessee has to pay surcharge and education cess. After calculating the basic income tax, as usual, if surcharge is applicable, we add surcharge. And in every case, we have to add 4% of health and education cess. Note, in all the LTCG arising on account of transfer of equity shares and equity oriented mutual fund is exempted up to ₹1 lakh. One more point you have to remember. Long term capital gain LTCG on transfer of equity shares and equity oriented units of mutual fund is not taxable up to ₹1 lakh of LTCG. If the LTCG is more than 1 lakh, then it will be taxed at a flat rate of 10%. Exceeding 1 lakh rupees of LTCG will be taxed at a flat rate. These are the provisions you have to remember because in the coming problem we'll come across this. Next, slab rates. First of all, I have explained you about flat rate. Now I am explaining about slab rates. Under this, the taxable income is divided into different parts known as slabs. Example, a person is having a total income of 20 lakhs. The 20 lakh rupees complete income will be not taxed at a single rate. The Income Tax Act says divide the total income into different parts. Each part is called a slab, and different slabs will have different rate of tax. Example, first 2,50,000 0% tax, zero tax, no tax. The first 2,50,000 of income, no tax at all. Second slab, from 2,50,000 1 to 5 lakh rupees. Second slab, the income tax rate is 5%. Next slab, 5 lakh 1 to 10 lakh rupees, 20% slab. Over 10 lakh rupees, 30%. Like this, the total income of the person is divided into parts. Each part is called a slab, and every slab will have a different rate of tax. That is called slab rates. Now, exceptions to the general rule. Normally a person is liable to pay the tax on the income which is earned during the previous year. Current assessment year is 21-22. In this 21-22, the income tax is charged on that income which is earned in the previous year. The previous year was 2021. The income earned in 2021 is liable to be taxed in the year 21-22. 21-22, next year. The current year, whatever we are earning, we are not required to pay the tax. The assessment will be done in the next year. In the next year. The current year, we are paying the tax on the income which we have earned in the last year, previous year. That is the general rule. But there are some exceptions to the general rule. Exceptions are, income tax will be paid in the same year in which it is earned. Income tax will not be paid in the assessment year. In the previous year itself, income tax will be paid. That is the exception. So what are the exceptions? First one, persons leaving India with an intention not to return India during the relevant assessment year. A person who is leaving India, who is going abroad in a foreign country with the intention that he is not going to return back in the assessment year. He is going to return back after a period of time. After 2 years, 3 years, 4 years, like that. He is going on employment. Normally, a person who go for employment will not return very frequently. In that case, Income Tax Act says, before leaving the country, whatever income you have earned, pay the tax right now itself. Don't wait up to assessment year because you are not sure you are going to return back in assessment year. So a person who is leaving abroad with an intention not to return during the assessment year has to clear off their tax and then go in the same previous year itself. Secondly, income of non-resident shipping companies. If a shipping company is there who does not have any representative in India, so any income arising to shipping companies by transferring the people or cargo from India. So whatever income earned, the captain of the ship or the master of the ship has to pay the tax and then leave the ship, leave the port. That means any shipping company who does not have any representative office in India, they have to clear the taxes and then leave in the same previous year itself. Third one, income of discontinued business. If an associate discontinued the business during the previous year, the same previous year itself he has to pay the tax. He should not wait till the assessment year. Discontinued business. Persons transferring the assets to avoid the tax. If the Income Tax Act thinks that this person is transferring the asset mainly to avoid the tax, in that case, Income Tax Act will make him pay the tax in the same year, not in the assessment year. Last one, incomes of bodies or association formed for short duration. Sometimes an association like joint venture, an association is formed mainly for a short duration. That means for a short duration, the association is formed and it will be ended. The Income Tax Act says if that is the case, as soon as it is closed, it has to pay the tax. It should not wait till the assessment year. So in examination, you may get a theory question regarding what are the exceptions to the general rule? The general rule is income earned in the previous year is taxable in the assessment year. But sometimes income tax will be levied in the previous year itself, not in the assessment year. That is the exception. Now, tax slabs on normal income. See here, flat rate of tax. The flat rate of tax is the one single rate which is applied on entire income. But slab rates of tax will be applied on different parts of the income. Now, how to calculate the slabs? We have categorized all the SSC individuals into three categories: non-senior, senior and super senior. For all the three categories, we have different slab rates of tax. Now I am going to explain you. First, non-senior citizen. Who is a non-senior citizen? A person who is under the age of 60 years. Below 60 years is called non-senior citizen. So what are the different slabs that income tax will be applied for the current assessment year 21-22? For the current assessment year 21-22, the first 2,50,000 nil, no tax. From 2,50,000 1 to 5 lakh rupees, it is 5%. From 5 lakh 1 to 10 lakh rupees, it is 20%. Over 10 lakh rupees, 30%. So 4 slabs are given: 0%, 5%, 20%, 30%. Up to 2,50,000, no tax. 2,50,000 and above, up to 5 lakh rupees, it is 5%. 5 lakh and above 5 lakh up to 10 lakh, it is 20%. Over 10 lakh rupees, it is 30%. These are the slabs applicable to non-senior citizen. Now, senior citizen. A senior citizen is a person who is of the age of 60 and above but below 80. 60 years and above 60 years but below 80 years, he will be called senior citizen. So the slabs applicable to senior citizen: first 3 lakh rupees, nil. 3 lakh 1 rupee to 5 lakh rupees, 5%. 5 lakh 1 to 10 lakh rupees, 20%. Over 10 lakh rupees, 30%. So what is the difference between non-senior and senior? In non-senior, basic exemption limit is 2,50,000, and senior citizen, the basic exemption is 3 lakh. That's it. Now last one is super senior citizen. A person who is of the age of 80 years and above, they are called super senior. For super senior, the basic exemption limit is 5 lakh rupees. So up to 5 lakh rupees, he should not pay the tax. Over 5 lakh rupees, tax is applicable. So up to 5 lakh rupees, first 5 lakh rupees nil. Then 5 lakh 1 to 10 lakh, 20%. We don't have 5% category in this super senior. We are having 0%, 20%, 30%. So 5 lakh 1 to 10 lakh, 20%. Over 10 lakh, 30%. These are called the slab rates of tax for individuals depending on their status, whether it's non-senior, senior or super senior. Now, income tax, first we calculate the income tax. To income tax we add the surcharge. After adding surcharge, we add 4% health and education cess. We'll get the tax liability. So what is tax liability? Income tax plus surcharge plus health and education cess is equal to tax liability. From tax liability, deduct the TDS, deduct the advance tax paid. You will get tax due or refund of tax. So from tax liability, deduct two things: TDS, tax deducted at source, and advance tax. The resulting figure, if you get positive, it is tax due. If you get negative, it is refund of tax. The next topic is casual income. Very frequently in examination, a theory question will also be asked regarding what are casual incomes. An income which is earned by an element of chance. All of a sudden, unexpected income is received. That is called casual income. So, if an income is earned due to an element of chance, such an income is known as casual incomes. Examples of casual incomes are winning from lottery, winning from horse races, crossword puzzles, card games, or any other games of gambling or betting or any TV program or any other competitive programs, lucky dips are some of the examples of casual incomes. These incomes are taxed at a flat rate of 30% plus surcharge and education cess as usually added. So for casual income, no basic exemption is allowed. Last one is tax for special incomes. Tax for special income. So there are some incomes on which there is a concessional or lower rate of tax. A single rate will be applied on some incomes which is a lower rate, that is called special incomes. So special incomes are taxed at a concessional or lower rate. These are taxed at a flat rate. These are STCG on transfer of equity shares and units of equity oriented mutual funds. Short-term capital gain on transfer of equity shares or equity oriented mutual funds. This is an example of special income. It is taxed at a flat rate of 15%. Similarly, long-term capital gain on other assets. Long-term capital gain on other assets is taxed at a flat rate of 20%. That's it. So this is the end of the theoretical part of tax rates, income tax rates. So inshallah next video I'll start the problems on tax calculations by applying different rates. Whatever theory we have studied, we have discussed in these two videos, that theory we will apply in the coming problems in the next video. So inshallah we'll continue the problems in the next video, but before that I want to inform that I have started a new channel by the name Khan's Accounting Institute. This channel I have made only for IGCSE students. So even anybody can watch the video and enhance the knowledge. So it will be more helpful to those students who are pursuing the courses of IGCSE, Cambridge and Edexcel. But you can also watch the videos. So visit my second channel, Khan's Accounting Institute. Subscribe my channel. Inshallah, we'll continue this problems on these tax rates in the next video.